Okay guys, good morning, good afternoon, good evening from wherever you're watching me from. Welcome back everybody and welcome back to the channel. It's Monday and let's see some trades we can take for today. But it looks like today I'm a little late looking at my time. I went somewhere this morning, so I just got time to open my laptop and I'm beginning to trade. So let's see if I can get some trade. If I don't get some trade, then maybe we can do some scalping. Okay, so let's see. Let's begin with today's trading. So first, looking at it from the currency trade meter, you could see that on the currency trade meter we have some currencies to be strong, others to be weak. I'll prefer this currency pair, which is the NZD, and I'll prefer the pound, which is the pound. These are the stronger currencies right now we have on our chart. Then for the weakest currency from the H4, we have the yen and the CAD, right? So I'll prefer between the yen and the CAD. So let's arrange them properly. So first we have NZD, CAD, NZD CAD, and we can also have NZD JPY. So NZD JPY, NZD JPY, then we can also have AUD. No, we can have pound with the JPY, right? Pound with the yen. So pound, Great British Pound with the yen. Then we can also trade the pound with a CAD. The CAD too is weak, so pound with a CAD. Okay, so currently this is the pairs we are going to look at for this live trading. So let's open our chart and see if you can get any trade to take now. If you don't take any trade to take, then we will do some scalping today. So first, let me start with the pound card. Okay, the pound card first from the base. So file, new chart, forest, then go to pound and the card. So pound with the card. And we input our template. You must always have template. When you open MT4 or MT5 by default, any chart looks like this, but you have to customize it to suit the way you want it to look. So I've customized some templates that I've been showing you here, guys. So these are some templates I use. Now my new template is T green. So I just have to input my template and to set the way I want it to appear. You see the difference? So this is the pound card. The next pair we will look at is the pound yen. So file, new chart, forest, pound with the yen. And you see the same way, it doesn't look interesting. You have to go to right click, go to properties, and maybe you can set some colors you want or set it to the way you want it. But I have templates, so I already go to, I right click, you go to template and you select the template you've already saved. Okay, so you click on it and then it's done. So this is the pound card and this is the pound yen. Now let's go to the M15 because that's where we are going to trade. M15, and we do auto scroll so that the chart will just appear here. We go to the pound card, the same thing. We go to M15, right click, auto scroll. Where is it? Okay, so now we are at the end of the chart. Now, so analyzing from this chart, as I said, I went for a meeting this morning, so I couldn't trade this early morning. So you see that the chart has already played. So which means today, looking at what I'm seeing now, I wouldn't be happy to take any trade from this chart. But let me explain to you after that. We go and do some scalping to see maybe we can scalp some 1 minute chart and then we're done for the day. Looking at the pound card for today, you could see that if you want to use your Fibonacci for our analysis, we click on the Fibonacci tool from the highest point of the previous day. When was the highest point of the previous day? And the highest point was that. Have you seen? And the lowest point is that. So we drag a Fibonacci tool from the highest point of the previous day to the lowest point of the previous day. Now we extend it. So now this Fibonacci tool can predict what the market may do for today. So imagine that I was here to trade this chart this morning. Where would have been the opportunity? Though the chart is still playing, but time is far gone, and looking at where the chart is, this is 15 minutes candles. I would be happy to enter a trade from this 15 minutes candles. Okay, so if we are to trade, where would be the opportunity? You could see that the market opened from the base Fibonacci level, right? The base Fibonacci level. So at this point, what you're looking at is to see if the market will come back to come and break this Fibonacci level. But the market could not break the Fibonacci level, which means it was a high probability that the market is actually going to trend upwards to the central Fibonacci level. Because if the market tried to test this level and broke it down, then we would have been confident that the market is likely going to break this particular level down and the market is going to trend downwards. But here comes the case. The market broke out of it, opened out of the central Fibonacci level, opened out of the base Fibonacci level, and never returned. So any opportunity could have been anywhere here, but there was no any proper signal except this morning star candle. This is the only, let me zoom it out. This is the only opportunity which looks like an entry, because this is a morning star in direction of the bullish candle. So this is a bullish candle. So when you see a bullish candle opening above the base Fibonacci line or any of the Fibonacci line, either the base or the top Fibonacci line, and then the market does not test back the base Fibonacci line, then you wait for a confirmation and then you enter. You can't enter anywhere here. You can't enter here. It's too far. You can't enter there. So the best place to enter is to wait for a confirmation. Either the market pull back down somewhere here, then you enter here. But you see that the market could not pull down exactly to the level again because it never tested it again. So now the next option is to look for confirmation. And here the confirmation was this bullish morning star pattern that we have been trading every time. So where would I have bought? My entry would have been somewhere here. Have you seen? After this candle close, so you have 1, 2, 3. This shows that the market is about to reset. This shows that there's indecision. And this next candle shows that there's bullish movement. So 1, 2, 3. Just after this candle close, you put your buy order here, or you buy immediately from there. Or you can just select one-click trading. Just one-click trading, and you just set the amount you want to buy or you sell. Then you click buy or you click sell. So you sell straightforward or you put your buy. You buy straightforward or you put your buy order just here. Where would have been your stop loss? Just below this base candle. So the stop loss would have been somewhere below this base candle. And take profit target is going to be twice. So let's say here, from here to this place is 150 points, around 150 points, which means your take profit target to be 300 points, which is not even more than the central Fibonacci level. Okay, always don't go all above the central Fibonacci because that place can actually resist the market. The market can pull back. So the take profit target should have been as twice as that 300 level, which means your take profit target should have been somewhere here. Have you seen? So your entry is here. Take profit target is there. This is the first opportunity you would have found if you were trading this chart. If you didn't find this opportunity, then the next opportunity would have been this side. You could see that there was a similar pattern here. This would have been the next opportunity where you can take the trade. Same stop loss criteria, same place to put your stop loss, and same place to put your take profit target. Or you can go a little above with 1 to 2 risk reward, but don't always cross the central Fibonacci level because the market can resist and come back. Okay, so take profit target 1 to 2 as we always do. Okay, so now that the market has played and left us, what is the next opportunity? The next opportunity is here. After the market breaks out of the central Fibonacci level, the best place to buy again is this side. When the market close above, then your stop loss, let me change the color of this so that you see it's a little different. Properties, let me change the color to, okay, let's go purple. Your stop loss just below, somewhere below here, and your take profit target as twice as that, maybe the next Fibonacci level. So from here, you enter here, take profit target here, stop loss somewhere there. Or if you think it won't reach 162, for instance, if you measure here from this side to this side, it's around 200 points, which means your take profit target should be 400 points. So from here all the way to 400, somewhere here, this is where take profit target could be. But in my opinion, if you ask, is it advisable to take this particular trade here, this setup, is it advisable? I wouldn't advise you to do that, because you can see that the market has already trended from the base. See, it has moved all the way from here going upward. So it's likely the market can reverse and then you might not get a winning trade. It's also likely the market can also go and hit your take profit target, because assuming our take profit target was there, definitely the market is moving forward, but we can't tell, you see. But in such scenario, it makes the trend very weak. So if I have missed all this opportunity, I wouldn't enter here at this side. I wouldn't enter after this candle close. I wouldn't enter here, because it's likely that the market can even come back, take me out, and even reverse. Guys, do you understand the difference? So let me create a rating and explain to you. I said, if the Fibonacci level is gone, okay. If I didn't get the opportunity here, let me do the Fibonacci level again. Okay, so if there was no opportunity here or there, the next opportunity would have been after this candle closed above, just above the central Fibonacci level. So your entry will be somewhere here. Take profit target below the central Fibonacci level. Don't go too far here, it's too far. A little below. Then, and that's your stop loss. Take profit target as twice, which is 200 points. So you measure 200 points from your stop loss to the take profit target. So take profit target should be around somewhere here, a little above the upper Fibonacci level. But I'm saying that I wouldn't have advised you to take this trade, because it's too risky. You see that the market has trended all the way from here upward, so it will reduce the strength of the trend. So if you take this trade, it's likely that the market can reverse. Though you could see that the market is actually moving to your take profit target, but it's likely that this market can reverse all the way and come down, because it looks like it has lost its strength. But it can still have a winning trade. But since the market has left us, we don't have any option now. Okay, so let's go and search for a scalping setup on a 1 minute time frame and trade. The same way on the pound yen, you could see that when you open the pound yen, you could see the similar setup. From the highest level to the lowest level, you drag it. And where will be the opportunity? You could see that at this level here, to the market open just exactly just above the base Fibonacci level. And since they all have the pound in them, they are highly correlated. So the net opportunity was here. This was the opportunity. You have to take the trade here, when the market closed just above the central Fibonacci level. So here, if you have taken a trade here, we would have been taking our profit, because the stop loss would have been somewhere below here, which is around 230 points. So stop loss here. Take profit target as twice as a stop loss. So 230, we are going to 260, 460, right? So 460 somewhere here. So we'd have taken our profit around this place. Guys, are you understanding what I'm taking you through? So take profit target here. But we miss all this. There's no opportunity for today. So let's go to the 1 minute chart and see if we can get some scalping trade to take right now, so that I'll be done for the day. Since I promised every month I'm going to put this chart here, I have to fulfill my promise and put it here. So let's go to M1 and do some scalping. So okay guys, so since we didn't get any trade to take on the M15 that we think the market has already left us, then our next option is to go to the M1 to find some trades on the M1, as I said. So let's go and see if we can find some live trading on the M1. So let's go to the pound yen, right? Or the card pound, which of them? Any of them. Let's go to the M1 and let's look for opportunities. So when you open the M1, you have to zoom it out to see what's actually happening in the market from the M1. And since we're on the M1, let me clean all these angles and bars and start everything fresh, because scalping, you need a different mindset, and when you're doing day trading too, you need a different mindset. Okay, so let's clean everything and do different analysis here. This is our scalping chart. What can we see? Obviously, we can see that the market is going upwards, right? The question is, so how do we enter from this particular moment? We are on the M1. We have two ways to enter. either to wait for the market to come down all the way to somewhere, either a horizontal resistance zone or support zone, then we find a way to buy all the way here. Or since we don't want to waste time, we find a way to enter the market exactly where it is. That's how we do scalping. But before we can enter exactly where it is, we have to zoom it out to see what's actually happening at that particular zone. We can see that, is there any resistance area there? Good. We could see the market has hit. We could see the market is hitting a resistance zone here. Can you see? This is the current zone for the market. So which means it's likely the market is going to reverse downwards. So since we are expecting that the market is going to resist to this particular point, I've entered my trade. I'm just catching the reversal. So I'll set my stop loss behind around $300. Good. And take profit target as twice as my stop loss, which is around $600. So this is where I've entered my trade. So I'm waiting for the market to hit my take profit target or to hit my stop loss, and then we are out of the market. So this is where I've entered my trade. So let's wait. So you could see that the analysis was very simple. Looking at the whole structure, this is a simple reversal trade I'm taking. But if you don't know how to do it, guys, don't do it, okay? Because the trade has already left us, you decide to take a reversal trade. So that's it. So when you open, let me go to view, and then I go to view toolbox. You could see that I'm in some small profit now, but anything can happen. This trade can reverse and hit the stop loss, or it can go on with our take profit target. So if this trade wins, then the winning target is $600. So 600. That's 600, around 600. Can you see? And then if it goes against us, we are losing around $300. So approximately 300. So 300. So that's it. So that's all what we are going to do. So we just have to wait for the market to either hit our take profit target 600 or hit our stop loss $300. So let's just wait. So I'm going to pause the recording for some time, and then when we are almost hitting our take profit target, then I'll come back, or maybe when we hit our stop loss, then I'll come back. So let's wait some time. Let me pause the recording and come back later. Okay guys, so it's been some time and the market is still playing around. You see we are still around $300 profit, but we are targeting around $600 profit. So at this point, some amateurs will say, why don't I take profit? Why don't I take profit? Guys, you can't do that, okay? In trading, small profit is not good. Don't say that small profit in business. In the traditional business, small profit is good, but in trading, having small profit is not good, because the day you're going to have a losing trade, it's going to take all your stop loss. So make sure that your stop loss hits perfectly and the take profit target also hit perfectly, so that your system will be able to balance itself. If you take small profit, your stop loss, it cannot balance all the losing trade you are going to have. So always make sure that you wait, you are patient for your take profit target to hit. Even if this trade reverse and go all the way back and hit my stop loss, I don't have any issue with it, because it's just a part of a trade. Trading is not always going to it's not always going to be a winning trade. Sometimes you're going to have a losing trade, sometimes you're going to have a winning trade, and it's all part of the trading process. It's all part of the trading system. So you shouldn't be afraid whether you're going to lose or you're going to gain. Okay, so if this trade loses, fine, there's no problem with it. If it wins, there's no problem with it. But the most important thing is how you're going to do your analysis to make sure that you are doing the correct analysis and you're applying the correct method in the market. That's the most important thing. Not about the market being a win, not about the trade being a winning trade or being a losing trade, because a good strategy, a good analysis can still be a losing trade, because you cannot control the market, but you can make good analysis so that there are odds in your favor. Okay, so you can see that the analysis we made, somebody be asked, how did he know it's going to reverse? How do you know that the markets are going to reverse our points? It's based on experience, guys, because this is what I've been doing for a longer period of time now. So per my experience, I realized that from where the market has gotten to, it's likely the market is going to reverse. That's why I took the trade somewhere here. So it's just from experience and from good analysis. It doesn't mean every time it's going to be like that. Sometimes you can still analyze it in a good way, and you're still going to have a losing trade, but it's just part of a trading game. But what I want to tell you is that, guys, if you get to a point like this and you are scalping or you're trading and you have gotten some profit, don't take your profit quickly. Make sure that your 1 to 2 is always hitting. If not, it cannot balance your trading system. To make sure always your trading system get balanced. That's why you have to take your profit 1 to 2 every single time. Okay, every single time. So we wait for the market to either hit our take profit target or hit our stop loss before we end our trade. But let's look at the bigger chart, the bigger time frame from the pound yen. You could see that those who let me go to M15. Good. Those who decided to take their trade here per my previous analysis they could have taken their profit all the way there. It would have been a successful trade. So if you traded today with this particular method, you would have gotten a winning trade, 2 winning trade, 1 opportunity here, all the way from here to there. Second opportunity, all the way even from here to there. Third opportunity, all the way from this side to this side. I think the Fibonacci is gone. Let me draw back the Fibonacci levels. Fibonacci level from lowest point to the highest point. So lowest point, highest point to lowest point. So you see now, 1 opportunity was here, second opportunity there, third opportunity here. And they would have gotten a winning trade because from here all the way to here should have been a winning trade, right? Good. So let's go back to our minute chart, our minute scalping, and let's wait for our take profit target to hit. But it's getting boring, guys. I'm watching it like that because if I take my eyes off, it will hit the take profit target without me recording it. That's why I'm still watching. So I don't know whether I should just stop the recording and move on for next day or just wait for it to hit while the recording is on. I don't know. I can't even take my eyes off because if I take my eyes off here, it will hit without me explaining to you. And so, guys, let's just end it here. Definitely where it has gotten to definitely hit, so that I just get up and go and do something else. Okay, I'm even tasty. I want to go and drink water, guys. So let's leave it here. Whatever happens, open your chart and analyze the market. Today is 18th of May. Open your chart, go to the pound card chart and see the same thing I've traded. The same thing, and analyze the chart as I did, assuming you were trading live, and you'll be able to understand the concept I was trying to put across you. Okay, so please do that. Just go to your chart, analyze your chart, and learn a lot from your chart, because the chart can tell you a lot of information than anything else can tell you. Price action is always key. Okay, so you can see that we are still around $345, $50, $350. Most of you would have say, oh, let me just close my trade, let me just close my trade, and you end up taking a small profit. And if you do that, your system will not work. Okay, your trading system will not work. Don't do that. Okay, so let me just go get out. So that will be all for this live trading video. Come back every Monday to watch such live trading videos here again. Okay, I'm Setowas, and if you liked and enjoyed the video, kindly subscribe to the channel and come back every time to watch our videos. Okay, until then, take care of yourself and see you next time. You see that now we are around $400. Can you see? Okay, so take care of yourself, guys, and see you next time. Bye.